Hello guys, and welcome to today's class. Today I'm going to be explaining more on how you can take your signal using the our POI, because I noticed from the previous class it might not be clear to some of you. So let me give you a practical example of what I was trying to explain on how you can leverage on your areas of POI. Now, the first thing I said in that video was that we are going to be using the POI of the higher time frame. Then we take our entry on lower time frame. The higher the time frame, the more stronger the POI. That means the more accurate the POI is going to be. So if you are using a POI, so definitely you should know that the result is going to be much accurate compared to using a POI of 5 minutes or 1 minute. Now, the first thing, whenever you open your chart every single day on any currency, check for the POI on higher time frame, at least maybe 1 hour. Then when you go to the 1 hour time frame and you get your POI, so you wait for price to come to that zone of that POI. I'm going to be giving a practical example. So when price come to that POI, when price is approaching that POI, you now move to the lower time frame to wait for confirmation before you take your entry. So this is what I mean by going to your 1 hour. Now let's start with the 1 hour here. POI, sorry, H1. I'm using H1 as an example. H1 POI. POI. That means point of interest or area of interest. So this is what we want to see in H1. Let's say we want to take a buy. Maybe there's a buy setup on our H1, or our main POI on H1 is on buy. So price is approaching that buy setup. Now, how do we leverage on it? Because we know that definitely if price get to that POI, is going to either make a retracement back. So we want to leverage on that retracement, because trading is all about waiting for price to get your POI, leverage on it, then you will see the market. That is why you need to have a strategy in place so that you don't just trade like a novice, or like somebody who is gambling with his or her money. Now, we are using the H1 POI. So what we want to see is something like this. Let's say, for instance, on the H1, price was moving up, right? Then later on, you just notice it get to maybe a particular resistance point or a key level area. All of a sudden, the price started dropping back to where it started from, like this. And the next thing we saw was price moved up again, like this. So immediately price goes above this level, because we need to make it practical. When you see price cross above this level, now what you will notice in your chart immediately is you'll be waiting for price, you'll be waiting for your indicator to tell you that price is at what you see in your chart next is something like this. You see BOS, that is break of structure. Sorry, it's not clear. Let me use a clear color. Let me use now. You see BOS. So you something like this, somewhere here. So when you see this BOS, is a signal telling you now this place has become order block. Then what you see next is your software will just highlight the last bearish candles and the last bullish candle like this. So you see something like this. It becomes an area of interest in 1 hour. So this time you don't do anything, you just watch. So what you'll be waiting for is you want to see price come back to this zone, approach this zone. That is what you want to get next. So you'll be waiting for price to do something like this, to come back into this zone. Immediately price is approaching this zone. This is when we move to our lower time frame, which is either the 5 minutes for sniper entry or 15 minutes. So when price is approaching this zone, we know definitely here is an area of interest on our 1 hour time frame. So we are waiting for price to come back here. This can happen on any pair, be it boom and crash, volatility, any pair. This is what we are waiting for. So you are not the one plotting it. You have a software doing all this for you. So you are not the one taking all these measurements. No. That is why as a novice, you still can trade like a pro, but you just need somebody to give you or interpret information what is happening in the chart. So when price approach this zone, is approaching this zone in your 1 hour time frame, this is when you pay more attention to what is happening in either 15-minute time frame or 5-minute time frame. For sniper entry, you come to 5-minute time frame. Remember that we are using H1POI. So don't go and be trading. Maybe you open your 5 minutes and you discover that price is approaching the 5-minute POI. And no, it's not done that way. If you are going to be using 5 minutes, definitely you'll be taking your entry in 1 minute. That means you'll be taking your entry in 1 minute time frame. So you do your analysis on a higher time frame, go to lower time frame for confirmation and entry. This is what is what when we are talking about technical analysis and whatsoever. This is it. The indicator has limit so many work for you, which on normal day you as a new novice you might not understand. So you might not get it clearly. Now, since price is approaching our area of interest, because definitely when there is a BOS, we are expecting price to come in. In another class, I'm going to tell you the reason why there is a BOS and definitely why price has to come into that zone. Because in forex trading, the major players of the market, they don't execute their orders once. They execute it batch by batch. They might just give a first order, then when it approaches a certain zone, they will now want price to come down, then leverage on. But I don't want to go deep into that. But this is what is working on value. So when you practice this, yours is just to make money. Follow the instruction, and definitely it will pay you. So as you keep doing it gradually, the previous videos you watch online, whereby they are telling you all these things, but it was not clear to you because you don't have that tools, you don't have that things giving you accurate details and accurate guide on what to do. So from now, you start those things will start when you start seeing those kind of messy videos, it will start digesting more into your system to know how to take trades either on forex or any other platform, because every pair does this thing. So now we are on the 1 minute. So price is now approaching our area of interest now, because first we want to see a BOS, then we want to see the candle, the structure or the move that led to that BOS. We want to see it. We want to see price fall into that zone. So when price approaches that zone, that is when we go to our lower time frame for execution. Now, this is what we are expecting in our lower time frame. So on our 1 hour, everything is set up, but we still go to lower time frame. If it is 5 minutes, we go for 5 minutes lower time frame for sniper entry. Now, M5, M5 confirmation. M5 confirmation for entry. So that is what this is what we'll be expecting on our M5. Now when you go to your M5, you now see price doing something like this. Despite that the H1 is here, now this is what you see. You see something similar to this too on M5. Sorry. Now in your M5, you see price doing similar thing like this. Like this. It will first give you a BOI, sorry, BOS. You see something like this. Automatically here is now your area of interest in the M5. So you immediately you see something like this in the M5. Now you wait for price. Sorry. Now we are waiting for price to do the same thing. Once price taps in here in the M5 like this, price will still be here in your H1, but in your M5 already it has given you a BOS, and immediately price comes in here. Now you'll be expecting a price action. Now you will be expecting a bullish move out. It can just give you either evening star or information depending. But immediately price approaches here, now you'll be expecting a breakout. So you can see something like this. Maybe there might be a resistance zone. I'm just saying for it can be, it cannot, you might not see it. So immediately price react here, you take your buy. Some people even take their buy here. Immediately price got into this BOI since it has given them the BOS before. Since price has fallen back into this zone, they take their buy. Now where is going to be your stop loss? Your stop loss is going to be here. Your stop loss will be around here. This is the swing low. You look for the swing low. You can use your H1 swing low or your M5 swing low. Some people can take that tight what is it called? Tight swing low. So your stop loss will be around here. Then your target, since it's a sniper entry stop, your target will be at this point. So that means here will be your stop loss. This is going to be your take profit. Take profit. And here will be your stop loss. Stop loss. So you see, it will be safer for you to do this. Now, remember you must wait for a confirmation of BOS in 5 minutes. Don't worry, at that point, price will still be in this zone in 1 hour. But in 5 minutes, it has already given you a break of structure just like what we have here. BOS. If you watch that video, most especially the first video, that was what took effect there. So we are looking for a buy, not a sell. If you are getting a sell opposite BOS, just ignore it. So we want to take a buy because price is where at our supply zone, demand zone. It is called demand zone in the higher time frame. So we are waiting for similar case because when price gets here, it's definitely going to react. Now, if you can't do these areas of stop loss and take profit, your Fibonacci retracement will give you in your 5 minutes when price is here. Now you'll be seeing area. This place can be your level 50 or level 61. Your level 50 or level 61. So what you do is just mark the digit of that zone, then use it as your TP. Don't extend it. If you are confused on how to do it, let me know. So because there's going to be a line, so you can just pick a line. At the right hand side, you can just see digits like this. Maybe let's say you see something at this side, 1, 2, 3. Then that is, let's say, for that means you take your profit, you mark it, then you put this figure in your take profit. Make sure it is aligned with your swing high. Then your swing low, you can also see digit like this. Or I'm not saying it's exactly this digit, I'm just giving you example. So you put this one as your stop loss. So if price should come to this place, it won't take much of your equity. But if it comes here, you can take, that is ratio 1 to 3 or ratio 2 to ratio 1 to 3 or ratio 1 to 4 of your profit. So this is what I was explaining initially regarding the POI. So if you are confused, I think this has given you a clear details of what it is. Our H1, we are looking for information like this. Let there be a break of structure. Then we want price to come back to that zone. Immediately price is approaching that zone, we switch to our 5 minutes. We are looking for a sharp move. We want to leverage it. That's what we call sniper entry. Immediately it taps in, give you a POS, it will give you its own BOS, that means break of structure. The immediately price is entering that zone, then you execute your buy order, leverage on it. So if it is on boom, area like this can give you $5-10. No matter what it is, just one lot, one position will give you a reasonable amount. So when you keep doing this, when you keep looking for opportunities like this and you are leveraging on it, in a short while, you might have accumulated a good amount of money. So this is how the POI works perfectly. So you can do this, then use your Fibonacci to leverage on it. When I say leverage, I mean to take your um to execute trade fast, then exit the trades first. Now, one other thing again is this level whereby price started bouncing back here. In your H1, this level here and this level, this price started moving up. It is called support. The down part is called the support zone, and this part is called a resistance zone. Here is called area of support, resistance. So when you're hearing resistance, resistance zone, this is called area of resistance zone. Then we have area of support zone. This is support zone. Support zone. Can you see? Now, among those software that you have, there are some software that will also give you quick info on this part. Now, as time goes on, when price is approaching this resistance zone, either on any pair, you can still leverage on it in a lower time frame. That means there are some people who do up and down. That means immediately there's a BOS, definitely they know price is going to go down, but they will wait for price to approach a resistance zone in that same high time frame. Then when price approach that resistance zone, then they'll be looking for an alternative order in a lower time frame. Now let me explain what I mean by that. So all this one we just did here is called for buying order. These are buying post. How you can take your buy entry. How you can take your buy entry. Let me go back again. So let me name it buying order. Buying order. So these are buying order opportunity. Now the opposite is, let's separate the chart so that we'll talk on how other people use this zone for the opposite side. So let's do it here. Now let's do it somewhere here. So let's do something. I will explain this. This side is enough. Now regarding this point of resistance where price got to in higher time frame. Now some people can still leverage it to execute, as in they can still take trades within this zone downward, but it is very risky. As a new beginner, please follow the one that is more clearer. But for maybe for us, maybe question purpose, because some of you might come, okay, since price got to this point and it started coming down, can we still take order? Yes, it is very possible. So this is what you'll be expecting to again. Now, because sometimes you might not have other block here. That means you might not see POI, but maybe your what is it called? Your pivot point resistance zone or the other resistance zone can be the one acting as other area of POI. So don't be confused. But what you just want to see in a lower time frame before you execute a sell order that will match down to this level, this is it. So in that case, you see in your 5 minutes now, this is 5 minutes. Let me state it clearly. 5 minutes M5 M5 sell zone, sell order. Let me just put it, sell order. So this is what you are expecting to see in your 5 minutes. Now it will now be like this. You see price, since is on this is what is happening on H1, right? So see what the price will be doing here now. For those of you who want to take the opportunity for sell, so you see price come like this. It come like this. Now it will give you something like this. Immediately you see this, which is our BOS in 5 minutes. Please, this is not high time frame. So automatically what you see next is you see something like this in your 5 minutes. That is when price is here at this resistance zone in 1 hour. So for you who is looking for a sell opportunity, immediately give a BOS. You are waiting for this price to come back up to this zone. Now when this price come back to this zone, then you execute your sell. As I said earlier on, here now becomes your the top, the swing high now becomes your stop loss. So you put your stop loss at the top here, then your take profit should be around here, or you use your Fibonacci retracement, because the next thing you will see is price will start coming down. So you can leverage it like this. It may go deeper. It may get to your 50 your 50 Fibonacci level or 61 Fibonacci level, and it's either move up. So you can leverage on this. Now, instances whereby you have your order block, price didn't come inside. I said it in my previous video that don't take any trade. Allow the confirmation to be, because when everything plays or come in line, definitely you enjoy your trade. Even if it goes against you, the loss you'll be having is going to be very minimal. It's not going to be something that huge. So these are just what you need. Other indicators attached to it are just to show you other area of POI which yours did not. Like at this point now, there is no POI here. that started pushing this price down. What we got here was just a resistance zone. It can be a key level that result to this. It can be any other factor. So the only way you can confirm if it's going to work out is when you go to a lower time frame, then you get this formation, a BOS price pushing back to that same order block, then you execute a trade, use your Fibonacci. Your Fibonacci will plot your 50 level for you and your 61 level. So if your 50 level is sweet enough, maybe it can give you $5, $3, then you execute. But if you want to extend it, you can extend it up to your 61 level. So all these things work in line. There is not day it will not give you formations like this for sell order. So this one is sell should not is not C order. It should be sell order. Let me clean. Not it should be sell, not C. Sell. So here is your stop loss for sell. The swing high, please. You can use your H1 swing high. That means you can put your swing high either at the top of this at this point here. That's you come to your H1, look for the digit, then you put it as your stop loss in your 5 minutes. Because sometimes price might just want to take out some people's stop loss before it now start going down, which is called then stop hunt. So price might want to take those stop hunt before it start going down. So you can just put it at the top of the swing high. So that will become your stop loss, which is SL, and here will become your TP. You can use your Fibonacci to do that if you are finding it difficult. Now you can become your TP, take profit. So I think this practical will make it more clearer for those of you who are still finding it difficult. So when these are the formations you want to see, when you have other block and price didn't go in that other block, I suggest you leave it, because in future price will still go there. It might not go there immediately, it might take time. So if price is not going there, no problem. It might go there in future. So you should always allow price to come into that zone, so that the remaining order they have, when they are taking it, you also leverage on it. Likewise, the same thing. Then sometime price might not fully enter the order block. This might be as a reason of fair value gap, which is imbalance. Yes, it do happen. I explained part of the imbalance in my first video, so go back and check it. There are instances whereby what price came to do is just to what fill that fair value gap or imbalance before it starts moving. Why sometimes it comes into the order block fully. So, but whatever be the case, always allow price to approach this. If it's fair value gap, your or imbalance, your software will also let you know, because immediately price is coming down, you plot it to see where there is fair value gap. So if it is fair value gap, if price get to your fair value gap and you notice it started going down, definitely it only come to fill that fair value gap. So it doesn't have much energy to move into the block. Why sometimes when you see it, it will get inside, and definitely at the end of the day it will close outside the box, so indicating a rejection, that is quick rejection. Those are kind of entries I like most. You see price coming in, and at the end of the day it will close, most usually on 15 minutes or 1 hour. Once it closes, it shows that there's pressure for down push. So I think I'll stop this video here. Then I want you to practice it, but before then, let's clean it and then go to the chart to see one or two things I was explaining here. Let's go to the chart and then let's talk about the live movement of price. Okay, this is boom 515 minutes. Now you can see, if let's check 4 hours. Good. Now you can see that price is in the 4 hours order block. This is what I was saying. This is not even the first time it has come into it before. Let me zoom it out so that you can see what I was saying. Now This is boom 500. For those of you who love to catch spike, like I said earlier, and you can see here was the other block. Here it has one below and it has another one up. So what I do is the one that price will attend to that I follow. If we are waiting for price to come into this other block before now, price didn't really tap into that other block, but you can notice that the second uh other block, price tapped into it. Price tapped into it. Now I will tell you the reason why this first order block. Okay, this first order block is more, to me, this first order block has more weight than this down one here has more order weight than this second order block. Now this is the reason. You notice that it was a full candle that price closed above. When you check uh the BOS, let me zoom out a bit. When you check the BOS, you notice that this candle is a full candle. That means a full candle, not a rejected candle, right? This one has more weight compared to this. But this other one, where we have this other block, this BOS, you notice that it was uh before this candle came up, this last candle here, it was what, a week. So I don't trade these blocks. I rather trade these ones that has a push. It shows that the push there is more solid. That means there was a buying pressure there, but in this one there was no much buying pressure. That doesn't mean price will not react to it, but what will make you believe if price is going to react to it is if your formation meets in your lower time frame. So when daily price approach here, you go to your lower time frame, you go to your lower time frame, then you look for the confirmation for entry. Then when you enter, you can see this one, it came all the way up to level, I think it was the level 50. It even went up beyond level 50. Maybe it went up beyond level 50. So it was almost approaching the level 50. But in your lower time frame, it definitely play. But here you can't see it clearly. So in your lower time frame, it will be more clearer. So when price got here at the first time, we have one other block. The first one was not mitigated, but price came to mitigate the second one. Then what do you see next? Price pushed up, which was like a retracement. Then next it started coming down. So when price entered this zone, you go to your 5 minute time frame. Then those things I explained earlier on will be your what will be the result for your confirmation. So you'll be waiting for price to do similar in lower time frame before you take your buy order. Then you just open for spike. Then you catch spike there. Because this is boom 500. So if you're taking buy, you are catching spike. Exactly. Now we have a sell order. Anytime price approach this sell order now in this 4 hour, maybe in future, maybe price get here and started coming. Sorry, maybe price got to this zone and you notice price was started coming up. Price has hit here, it couldn't go down. What started seeing here was huge spike all the way to this level. So we go to our 5 minute time frame. When price start entering this zone, we go to our 5 minute time frame looking for a sniper move there. Can use your 5 minute time frame, can use your 15 minute time frame, but make sure let price approach uh your other block or your POI on higher time frame. This is 4 hours. So this is how we do it, and you can see how this Fibonacci has given you areas of exit. So if you are catching spike now, if you want to open for spike, you open. See that you want to take your entry in your lower time frame, you see areas whereby you can just exit the market, or you just use the swing high and swing low as area of entry and exit. So that is that. In our next class, I will still explain something relating to this. Now, before I go, you might be asking me, but admin or hello sir, I couldn't see BOS. 4 hours has given us what? A bearish BOS. See it. You see now. So until price comes in here, we are not taking sell. That is what you see. There is a BOS now telling you for what is it called? For sell. But we are waiting for price to come. So if price doesn't come to this zone and you take your trade, it is more risky. That's why I say when you notice a move into this zone, because now it's telling you that this zone they still have orders pending that they're going to push out later. So for you to catch those orders, immediately price is approaching it, go to lower time frame, look for something similar, price to break structure, there's a BOS. So we want price to come into this zone. Once price approach your new order block, then you to take the order, then you exit. This is how we trade both forex and step index or synthetic indices. But on synthetic indices, factors like news and others that is affecting forex will not affect you here. So everything is pure. Just don't be greedy, don't execute two trade, and be patient enough for price to get to these areas I explained now. It is similar to all pair. It is similar to all pairs. So let's even check 5 minutes. Do we have any buy setup in 5 minutes? Since price is at a critical zone here, let's just check if there is buy setup. Let's know. We've not seen. Okay, all we only saw. Can you see now? All we saw was a BOS for sell order. So if price comes in here, since we have 1, 2, 3, I don't normally do that. I go for the highest one. We are not looking for a sell order now. We are looking for a buy order. That means buy formation. So don't be gullible, because when you go to H4, what order is it in? Is in buy order, right? So there is possibility of huge spike. If you are looking for a buy, don't be tempted to take sell. Oh. If the pressure is on buy order for maybe the point of interest is on high time frame is a, a bullish move, then you come to lower time frame like what we are seeing here now, this might not work. Oh. So don't be so gullible to fall for this. It might not hold. Price might just break it out. Yes, because on the higher time frame, price at its demand zone. That means it's looking for a way to move up. So don't go and don't go and make such mistake. If it is on a sell zone on higher time frame, also look for a sell opportunity for lower time frame. If it's for buy order in higher time frame, look for buy opportunities in lower time frame. Don't let all these orders, because these are very, it's not a price might react there, but it will only take effect in 1 minute, and that is not our agreement. So look for a BOS that is leading up, let price retest it, then you let it give you another block for bullish move when price comes into that other block, because on our 4 hours, that is what we are doing. But 5 minutes is even too small, because when you are doing 4 hours, I think 30 minutes should be the best place to do such order. Yes, your buy order. So you should be looking for a BOS for buy order here, because we have sell in 30 minutes, fine. But we are looking in 4 hours. What do we have? We have buy opportunity. So we are looking for buy opportunity, not sell opportunity. It is when price get to our sell zone in 4 hours, then we'll be looking to leverage on our sell zone in lower time frame. So don't go and change it. Say, oh, the price is coming to an order which is countering the order in your higher time frame. No, you might get the price might shock you, because now what is it telling you? It is telling you that it is possible. Your C of Fibonacci is telling you it is possible price is coming up to your 50 level or your 61 level. So when we have that buy opportunity, now let's say we have other block already in place, then it has highlighted area of interest, then it has come back into that other block. So if we are taking order So these are areas we can be expecting. You can put your um take profit in your 50.0. That means you hold it for price to push up to this level, or you hold it, you can extend it to 61. Hmm? But if we are doing the sell in 4 hours, so when price comes in, then we take the same order below. That is how it works. I believe it's clear now. Now, initially, I believe there was another block here before now in 4 hours. Just let me show you something. Do you see what price? The price came here, then it touched that, it did what we call change of structure. It did what we call change of structure, a break of structure, went into the zone, then it gave a sell move. But if it's not that way, until price come to this zone and until we see a other block on higher time frame. But for now, it is a buy move, so don't be tempted to come and start taking sell in lower time frame, because you can see this is buy. When you go to 5 minute time frame, the price will push up. if you are if your or POI on 1 hour, 4 hour is buy, anticipate on buy opportunity on lower time frame. If your POI is sell in higher time frame, anticipate for sell. These are the tricks. This is how people miss it, because they'll tell you, if you just open, some will tell you I don't like trading higher time frame. All right, see what will happen now. Somebody who don't have all this knowledge might just come, oh, 5 minutes. They will tell you, oh, see sweet market. Once price come here, I'm going to take sell, then I'm going to hold it up to this. Once price, you see price just break it out. Yes, price will just it will counter all this what is it called? All this level. It will just break them off. That is why I said always use your higher time frame. It might take effect here, but it will only last in 1 minute time frame. That is, if you are using 5 minute POI, so you'll be expecting to take your trade in 1 minute. But now we are not using 5 minutes against 1 minute. We are using higher time frame. And in our higher time frame, what is the opportunity there? Is buy. Buy is on a buy zone, on a demand level. So these are the things some people don't know. That is why they blow up their account. I think we've come to an end of this class. In the next class, we'll go more at it. By now, you should be getting more knowledge and more info on what these things are doing every day. It happens on every pair. So, cheers, guys.